The stock market. It can seem intimidating, a world reserved for financial wizards and Wall Street moguls. But what if I told you that the stock market is not a fortress reserved for the elite, but a gateway to financial freedom accessible to anyone? The stock market, with its vast potential for growth and wealth creation, is a tool that everyone can and should understand. This isn't about becoming an overnight millionaire. This is about taking control of your financial future. It's about making your money work for you, not the other way around. Whether you're saving for a down payment on a house, your child's education, or a comfortable retirement, the stock market can help you get there faster. By investing your money in companies you believe in, you become a part owner, sharing in their success. As they grow and prosper, so does your investment, creating a virtuous cycle of wealth creation. Let's get started. Before you dive into investing, it's essential to understand the lay of the land. The stock market is a platform where buyers and sellers trade pieces of companies, known as stocks or shares. When you buy a stock, you're essentially buying a small ownership stake in that company. As a shareholder, you participate in the company's profits and growth. Imagine you love a local bakery known for its delicious pastries. In the stock market, you could buy shares of this bakery. As the bakery flourishes, the value of your shares would likely increase. You could then sell those shares at a higher price, making a profit. Understanding these basic building blocks is crucial for navigating the stock market effectively. Remember, the goal is to gain a fundamental understanding that empowers you to make informed investment decisions. Ready to make your first investment? It's easier than you might think. The first step is to open a brokerage account. Think of a brokerage account like a gateway to the stock market. It's where you'll deposit money, place trades, and manage your investments. Once you've chosen a brokerage account, it's time to fund it. Remember, it's wise to start small and gradually increase your investment amount as you gain experience and confidence. Now comes the exciting part, choosing your investments. As a beginner, it's generally recommended to start with low-cost index funds or exchange-traded funds, ETFs. These funds provide instant diversification and reduce risk. The key is to start with what you understand and gradually expand your portfolio as you learn more. Investing is a marathon, not a sprint. The stock market is like a vast ocean, teeming with diverse investment opportunities. As a beginner, it's easy to feel overwhelmed by the sheer number of options available. One popular option is index funds, which passively track a specific market index, such as the S&P 500. By investing in an S&P 500 index fund, you're essentially gaining exposure to the performance of the overall U.S. stock market. Index funds are known for their low fees, diversification benefits, and historical long-term growth potential. Another option is exchange-traded funds, ETFs, which also track a specific market index or basket of assets. ETFs are traded on stock exchanges, providing more flexibility and trading opportunities. For those seeking more hands-on involvement, investing in individual stocks can be an exciting, albeit riskier option. This involves researching and selecting individual companies that you believe have strong growth potential. However, it's important to note that investing in individual stocks requires more time, effort, and knowledge. Thoroughly research companies before investing your hard-earned money. Wise words from the wise expert advice for new investors. Navigating the stock market can feel like embarking on a journey into uncharted territory. But fear not, for you don't have to go it alone. Over the years, countless financial experts have shared their wisdom to guide newcomers. Legendary investor Philip Fisher emphasizes the importance of looking beyond short-term market fluctuations and focusing on the intrinsic value of the companies you invest in. Benjamin Graham, the father of value investing, highlights the crucial distinction between investing and speculating. Warren Buffett underscores the power of long-term investing. Be patient, stay invested, and let the magic of compounding work its wonders over time. Focus on building a well-diversified portfolio of quality investments and holding them for the long haul. Time is the friend of the wonderful company, the enemy of the mediocre. Learning from the best inspiring success stories. The world of investing is replete with inspiring success stories. One such story is that of Grace Groner, a secretary from Illinois who amassed a fortune of over $7 million through disciplined investing. Another inspiring tale is that of Ronald Reed, a janitor from Vermont who accumulated a fortune of over $8 million through shrewd stock picking and a buy-and-hold strategy. These stories serve as powerful reminders that financial success in the stock market is attainable for anyone willing to put in the effort. It's not about having a high income or being a financial wizard. It's about educating yourself, making informed decisions, and staying disciplined in your approach. The stock market rewards those who are patient, persistent, and willing to learn from their mistakes. With knowledge, discipline, and a bit of luck, anyone can harness the power of the market to create wealth. Patience, the silent partner. Understanding long-term growth. In the realm of investing, patience isn't just a virtue, it's the secret ingredient to unlocking long-term growth. The stock market is not a get-rich-quick scheme, it's a marathon, not a sprint. When you invest in a company, you're essentially planting a seed of financial growth. It takes time for the company to execute its strategies and generate sustainable profits. Impatience can be detrimental to your financial well-being. Stay focused on your long-term goals, tune out the noise, and let your investments grow steadily over time. Think of the stock market as a roller coaster ride. Stay buckled in, ride out the volatility, and enjoy the journey. Navigating the roller coaster, managing risks in the stock market. The stock market, while a powerful engine for wealth creation, is not without its risks. One of the most effective ways to mitigate risk is through diversification. Spread your investments across different asset classes, such as stocks, bonds, and real estate. This helps to cushion the blow if one particular investment or sector underperforms. Another crucial aspect of risk management is understanding your risk tolerance. This refers to your ability to stomach market fluctuations and potential losses without making rash decisions. Your risk tolerance is influenced by factors such as your age, financial goals, investment timeline, and personal comfort level with risk. If you're risk-averse, you might opt for more conservative investments. If you're comfortable with higher risk, you might allocate a larger portion of your portfolio to growth stocks. Tailor your investment strategy to your unique circumstances, risk tolerance, and financial goals. The power of compounding, your money working hard for you. One of the most compelling reasons to invest in the stock market is the power of compounding. Compounding is the snowball effect of earning returns on your initial investment, as well as on the accumulated interest or dividends. Imagine you invest $1,000 in a diversified portfolio of stocks and earn an average annual return of 7%. After the first year, your investment would grow to $1,070. In the second year, you're not just earning 7% on your initial $1,000 investment, but also on the $70 in interest you earned the previous year. This means your investment would grow to $1,144.90. The longer you stay invested, the more powerful the compounding effect becomes. Over time, even small, consistent contributions can grow exponentially. The earlier you begin investing, the more time your money has to compound and grow. The power of compounding will work its magic over time. Embracing the journey, your path to financial well-being. Investing in the stock market is about taking control of your financial future, securing your dreams, and creating a legacy. It's about continuously learning, adapting to changing market conditions, and making informed decisions. Don't be afraid to make mistakes along the way. Every mistake is an opportunity to learn and grow. As you embark on your investment journey, remember that you're not alone. There are countless resources available to guide you. Investing in the stock market is an investment in yourself, your future, and your dreams. Embrace the journey, stay the course, and watch as your financial well-being flourishes. Share your story. Join the community of empowered investors. As you embark on your investment journey, remember that you're joining a vibrant community of like-minded individuals. Share your experiences, insights, and lessons learned along the way. Connect with fellow investors online or through local investment clubs. Engage in discussions, ask questions, and learn from each other's experiences. The collective wisdom of the community can be an invaluable resource. By sharing your journey, you're contributing to the collective knowledge of the community. Together, we can demystify the stock market and empower each other. Let's embark on this exciting journey together.